Hi, this is Steve Westmark with Counselor Realty. Thanks so much for watching my video blog. I'm going to update you on what's been going on in the Twin Cities real estate market through the end of November of 2011. The most current pending sales show that we're up by about 31% over last year at this time, and that's over the last 3 months. And you'll see that on this chart. The next chart I'm showing you is showing the inventory of homes, which is a really positive indicator of what's happening in our marketplace. We in fact have about 20% less listings today than we had on the market last year at this time. What that is doing is it's beginning to firm up the inventory so that you'll see that currently we're at about 20,000 listings. At the peak of our marketplace in 2008, we had over 30,000 listings. The next chart I want to show you is the closed sales and comparing what's gone on in the past years as well as comparing against other months. You'll see in the closed sales in 2009 in November there were 4,000. In 2010 there were 2,500, and in 2011 we have moved up in sales to 3,000. As you look at year to date, you'll see that there have been 37,000 sales compared to 34,000 sales in 2010. So we do have an increase in the market and the number of unit sales that have happened. The next three charts I'm going to show you all have to do with pricing. The first one is showing median sale price year to date. You can see that the prices increased in 2010 slightly, and that so far in 2010 or 11 we're down by about 10.3%. The next chart is the average sale price, which shows that in 2009 we were at about an average price of $200,000. Then we increased by about 6% in 2010. 2011 we've dropped back to $195,000. The last chart that you'll see as far as values is that, and I think is a really good thing to look at, is the dollar per square foot. That in fact in 2009 we were at $105 a foot, 2010 we were at $105, and this year we're at about $94 a foot. I believe that what we're going to be seeing going into 2012 is kind of a natural easing into some kind of increase in pricing versus what we had seen in 2011. The last chart I'm going to show you is the area of distressed sales versus the traditional sales, and it shows what went on in November of this year. In 2009 we had less bank-owned and less short sales, and you can see that over the last 2010, 2011 that our bank-owned sales are about 30% and that our short sales are increasing slightly in percentage points from 11% to about 13%. The strength in our market that's going to happen, and we hope to see as we go into 2012, that the beginning of the lender-owned will become less and that the short sales will begin to have a turnaround so that our traditional type sellers will not be affected in values as much by that type of housing. Make it a great year in 2012. Look forward to our update. We're at the end of January where we're going to talk about the whole year in advance and in fact be broken into 2 different sections to really explain what happened in 2012. Make it a great day. Thanks.